A truly bizarre inheritance tax planning shemozzle has left me with £10,000 to invest. But where should I invest it? I decided to give my old friend Sam Volkering a call. He first told me to invest in Bitcoin way back in 2012. And I suppose the best solution here is for me to buy a time machine for £9,000 and to invest the remaining £1,000 in Bitcoin way back in 2009. But failing that, Sam Volkering, what should I be doing with my £10,000?
I was going to say, to start off with, this sounds like one of those emails that appears in my spam folder all the time. Hello, Sam. I have £10,000. Please help me invest. I mean, tricky one, because if I go and tell you exactly what I think, people might follow that advice specifically. So I'll get in really big trouble with our legal and compliance team. Let's though say that I think right now, to be fair, if you had 10,000 quid spare, I'd be investing in the crypto markets. Because everything is just lining up perfectly for what is going to be another big cycle. Just this week, Larry Fink has come out and he's talking about things like the Bitcoin being as big as the US housing market. BlackRock continuing to push on with, I guess, the financialization of Bitcoin. Their ETF that they launched this year as the most successful ETF launch in history. It's just the first step of what's going to be a much bigger push into digital assets by BlackRock and then subsequently by other big investment managers. Michael Saylor's pushing out a whole bunch of content for other businesses to start understanding how to use Bitcoin on their balance sheets and as a treasury asset. And I even saw somewhere there was another company that's adding like $30 million of Bitcoin to their balance sheet. This is a juggernaut that is going to continue. And as we all know, the supply of Bitcoin is finite. And as more and more of these big institutions and companies and wealth looks to seek and find its way into this asset, and again, Fink is, they were talking about it this week as looking at Bitcoin and crypto as its own unique asset class, which, you and I have been talking about this for years, for a very long time. And I'm sure plenty of our viewers know that and see that. And then when they see things like Larry Fink talking about this on CNBC and Bloomberg and these big mainstream outlets, they go, oh, yeah, that's exactly what these guys were talking about over the last few years. It's happening. And so, everything is lining up for what I see to be just another really big cycle.
Yeah, that answers the why now. There's this big wave of buying from a new level and a new type of buyer over the next few years, which implies at least strong price increases given that the supply of Bitcoin is finite. But give me the most basic case for why crypto in the first place. So why are all these Wall Street institutions and funds and all these ETF providers, why are they all going for Bitcoin? What's their argument, and what is the most basic form of argument for why you should own crypto?
There's two reasons why they are doing this. One is because it really is a significant hedge against de-dollarization. So as the US dollar continues to weaken, Bitcoin is the answer. It continuously maintains strength and grows in value against the US dollar. So it's a huge currency hedge for these institutions, and it's also a massive. Well, maybe there's three reasons. The other is, again, it's a hedge against instability and failure of the banking system, ironically, which they're all somewhat tied to. So it's kind of like this risk hedge for them because it is often uncorrelated. It's an uncorrelated asset, as BlackRock's described. And then the third thing is that, and this isn't necessarily about Bitcoin, this is about what's coming next, is that they see this as a potential return. Well, they see Bitcoin as a return generator for clients. So there's push and pull factors. They see it as a way to generate returns for their clients. They also want to push the boundaries of innovation. So they see other crypto as potential ways to generate yield. And this is what I think is going to come next. And this is what we've seen with, granted, the Ethereum ETF can't do it just yet, but at some point that will unlock. So there's a multitude of reasons why they're pushing into this, and it's based on returns. It's based on their ability to hedge themselves against a whole bunch of other junk that's going on in markets and governments and central banks. And it's for them to push innovation to provide what their clients want and are demanding of them as well.
One of the things you've always done is, I guess, unlocked for people the fact that there's a lot of cryptocurrencies beyond the main ones like Bitcoin and Ethereum. Are you thinking that people should be buying the famous names, the big ones, or are you suggesting people should go beyond Bitcoin and Ethereum?
Both, to be honest, is that the real stalwarts of this world, this ecosystem, this asset class, have significant upside potential from here. Again, whether you view Bitcoin as digital gold or whether you view it as a risk hedge, it can be applied under many guises, I suppose. And something like Ethereum as well is that we're talking about an infrastructure more so than money or a store of wealth or value, as Bitcoin often is referred as. And you look at applications and layers that are built on and around Ethereum, like Coinbase, for instance. They've got an entire network that they call Base, which we're seeing a lot of stablecoin issuance and movement and transactions being built on. And that rollout is, again, tied inextricably to Ethereum. And so you've got these sort of compounding factors for something like that as well, and the increasing use of that. And I think what we'll start to see is, again, stable coins used on blockchain networks like Ethereum or like Base, and we'll start to see that get a lot more traction in the next 12 months. And then you go sort of push out from there, and then there's a whole bunch of other things from, again, if you're talking about it from a pure data play, then there's obviously a lot of excitement around AI at the moment and AI stocks, but at the core of that, it's about data and how we process it, where we process it, the security of that, the validity of that, and the provenance of that data. And that's where blockchains and, there are different projects out there looking to fix that, whether it be, data provenance or whether it's reliability, security, surety, and finality. So there's that aspect of it. And, there's also the flat out bonkers, people call it idiotic, people call it pointless, but you can't ignore the meme coin market and everything that's going on there, because whether people like it or not, or think it's ridiculous or not, there is money to be made there. But you've got to understand that some of these things don't trade on traditional fundamentals. It's about community, cultism, a meme, popularity. These are intangibles that you don't just learn how to figure out overnight. You've kind of got to have been immersed in the degenerative nature of some of these groups and meme communities to really understand how they work. But there's big money to be made on the table there as well. So we can't ignore those things. And it's something that we will be looking at across the board.
Take me through how I should be investing in cryptocurrencies. What's not the particular exchanges, but the process. We have lots of emails from lots of readers over the years saying that their bank prevented them from buying or even transferring money to the exchange, for example. What's the process that I should follow, the next few steps, if I'm going to invest this money in cryptocurrencies?
Yeah, the process is getting relatively easier. That a lot of the big exchanges that are operational in the UK now have got quite stringent rules and regulations that they have to adhere to, particularly in the UK. And this is really, in the last 12 months and a bit, has become of more significant note. And they've, put in the steps in place at great cost to get to this point. As have we, which we'll chat about in a minute. But the first steps is to open an account or have an account with a big exchange like Coinbase or Kraken. They're two of the main ones in the UK, and a lot of them link in with faster payments so that you can quite easily transfer and transact from your bank into those accounts. But both to buy and then to cash out and get back into pounds if that's what you want to do. So that's really the first step. And they're very intuitive. They take you through a process of making sure that you understand what you're doing in terms of risk. And, if you meet those criteria, you can jump in and you can start, buying yourself some crypto pretty quickly and pretty easily now.
Yeah, one of the things I've noticed over the years is how much easier it is to do crypto than it is to do traditional stocks, with the accounts and the process and the interaction with your bank. For all the challenges we've had from readers about the difficulty of moving money in and out of crypto because their bank makes it difficult, or the regulator or the ID or whatever it is, the traditional market's not that much better, unfortunately. Let's finish then with an update on what you just mentioned there, that there's been some changes in the market that are now allowing you to make your own changes with your own publication. I don't fully understand the details here. So take us through what's changed.
Yeah. Well, in the last year, both in the UK and in Europe, there's been, major regulatory focus on the crypto industry, from really around who can offer services, how they offer services, and the processes that they need to have in place to ensure that people understand what this market is, in particular the risks involved, and to help people to try and minimize or mitigate losses and failure in this market. If anybody's had a Coinbase account or Kraken or any of the exchange accounts, you may have sort of got a flavor of what this looks like. And it's required people to go through a certification process in order to just use these systems, where you have to answer questions about risk and about the industry and about consumer protections, of which there are none. These things aren't regulated by the FCA. Bitcoin isn't regulated by the FCA. And if you have money in some other small crypto and it goes to zero, there's no recourse from the regulators or the FCS. I can't even remember what the acronyms all stand for. There's no recourse. Basically, you go to zero, you lose your dough. It's like that. So these processes are a little onerous, admittedly. They're not difficult to pass if you're switched on enough, but it puts a burden, a high regulatory burden and responsibility on organizations to make sure that the people that they're serving, understand what this is all about. And at Southbank, we've been bundled into that category, whether we like it or not. The way that we operate our business is such that even though we don't handle money, we don't facilitate trades, we don't custody assets, we don't place investments for readers, we have still got to adhere to these regulatory requirements and burdens and certifications. And that's why for the last 12 months, we've really been quite hamstrung and had our hands tied behind our back as to the ability to provide any kind of advice on crypto to anyone, let alone market it or put it out into the wider world in any particular way. We now have much clearer guidance as to what we can do and how we can do it. But that's taken a good 12 months to sort out, with a lot of lawyers, legal opinions, time, effort, cost, and it's been frustrating. But as I say, that investment, both from a financial and human capital perspective, to understand what we can do so that we can do it in a way that ensures that we meet the requirements by the regulator, we've got to that point now. And it's been worth it, because we think that people need proper, educated, experienced advice in this market. And we are ready to go again with providing that kind of service to our readers.
It feels wonderfully ironic, or painfully ironic, that just when you're allowed to make these sorts of recommendations to specific groups of customers, again, I have the money to invest, but I'm not going to be allowed to buy your crypto recommendations, of course. That's part of our staff trading policy. So, there's this weird dichotomy where for the last year I could have, and now I'm not allowed to. Anyway, I'm going to let readers know what I end up doing with this money, and we can chat about how things go over, I guess, the next few weeks or months. Thanks very much for joining us, Sam. And to everyone at home, thanks for watching.